One of the most important and fundamental concepts in Islamic finance is riba, or what is known as interest. Ironically, not very many people know the exact definition of riba. Not very many Muslims, and of course, in case of non-Muslims, I would not be surprised if they do not understand what Islam means by riba. Riba actually is a technical concept. It has some economic connotations, but it is primarily a legal, technical concept. And I would like to define riba for the benefit of those who are interested in Islamic banking and finance. In general, we find that in a definition of riba, we say that this is actually interest. And when we refer to interest, we say that in monetary transactions, if there is an excess, that is riba or prohibited interest. Technically, it is a very broad concept. In a transaction whereby two parties exchange an asset in unequal quantities, there is a possibility of giving rise to prohibited interest. For example, if I exchange 1 kilo of wheat with someone else who gives me 2 kilos of wheat in return, whether this is on spot or on a deferred payment basis, this will give rise to prohibited interest or riba, which is mentioned in the Islamic doctrines of transactions. This is different from a trade. Okay. In Islam, there is a very clear distinction between riba and trade. Trade is an exchange of counter values whereby they are actually two different assets. For example, if I exchange $1 with someone who gives me 2 cookies, then basically there is a transaction in which price is money and the asset being exchanged, i.e. cookies, because the two counter values are actually two different assets. Hence, technically this is trade rather than riba. Now, important thing is that riba is actually a nominal concept. This is not a real concept, i.e. if anything in nominal amounts is exchanged in unequal quantities between two parties, that would give rise to interest, prohibited interest, or riba. Riba is a nominal concept, i.e. it is about quantity. It's not about quality. Sometimes people get confused. I have heard people saying that, okay, what happens if 1 kilo of high quality wheat is exchanged with 2 kilos of lower quality wheat? Because in terms of value, okay, probably they are the same. But from Islamic viewpoint, riba is a nominal concept. It's about quantities. It's not about quality. Hence, even if there is a quality differential between the two counter values, it would give rise to riba if these two counter values of different qualities are exchanged in unequal quantities. Similarly, there is a distinction between a nominal concept and a real concept. And again, because riba is not a real concept in economic terms, hence, if someone lends me £100 today for 1 year, and during 1 year, because of inflation, the value of that loan goes down, it should not imply that I have to give more than £100 to the lender. Why? Because, as I said, riba is not a real concept. It doesn't take into account the value deterioration. It's about quantity. I received £100, hence from Islamic viewpoint, I should be paying back only £100, even if the value of £100 has deteriorated during the term of this lending contract. Hence, in countries where there is hyperinflation, if someone is lending to someone else a quantity of money, it should not imply for justice or fairness grounds that the borrower should be paying more to the lender. Why? Because inflation is not a micro concept, i.e., inflation is not created by either the lender, a small lender, or the borrower. If the borrower has not contributed to inflation, why should he be penalized for that? Economists would say that there are a number of reasons for inflation. It might be because of the monetary policy conducted by the government or by the central bank, whatever be the relevant authority. And if I, as a borrower, have not been contributing to this inflationary process, I should not be penalized. Hence, from justice viewpoint, it is important that the borrower should not pay more than what he has got in amount or in quantity of money.